Eric Gonzalez covers McDonald's with a buy rating, just raised his price target to $320 a share. Eric, what's your read on the modest pullback in the shares today? They have had a pretty good run, but is there some concern about the sustainability of this comp growth?
Sure, thanks. It's great to be here, Mike, and thanks so much for having me. The bottom line here is that McDonald's delivered another strong quarter that included double-digit same-store sales growth in each of the three major segments. In the U.S., comp growth was 12.6%. This was well ahead of consensus 8%, but perhaps more in line with what our clients were expecting. If there's one dark spot, I'd say it was probably that food inflation didn't moderate quite as much as we would have hoped. This caused some contraction in the company-owned store-level margins. But, this was more than offset by other parts of the P&L, including the franchise margins. And most notably, the company said that franchisee cash flow improved year over year in the first quarter. This came after declines last year. So overall, it was a really strong result.
And then the comments we just heard from the CEO, that's not causing you to adjust what you think they can deliver in the later part of this year?
Yeah, sure. Look, the company suggested that there were some macro challenges that we're servicing. This included a downtick in items per order, so fewer people having fries with their order, an uptick in pricing elasticity, suggesting customers are being a bit more mindful of their spending habits. But, we believe the brand is well positioned to outperform. They've proven it in the past, and should economic conditions continue to deteriorate further, we think they would outperform their peers.
Yeah, that is the tricky part. If macro is causing McDonald's to slow down, people like McDonald's, the stock, in a slowdown. So it's hard to read. Talk about Chipotle a little bit as we look into the numbers. What are you expecting from them, and how do you feel the stock is positioned?
Yeah, sure. So for Chipotle, we're expecting around 9% same-store sales growth in the first quarter. Store-level margins, the low to mid 24% range. That's consistent with how they guided back in February. With that 9% comp, we're looking for low single-digit positive traffic, perhaps offset by some negative mix, which has been the trend in the past few quarters as people shifted from group orders, back to those individual store visits. But really, the key here is how the brand is performing in April. The stock's had a really nice run up year to date. It's up 29 to 30%, and about 10 to 11% in the last month. A lot of this reflects the optimism that traffic's accelerated in recent weeks, perhaps to that mid-single-digit range. So remember, this is a company that took prices up 25 to 30% since the start of the pandemic, and we have seen some pushback from consumers, most recently in the second half of 22, with the guest counts going negative in the third and fourth quarter. So, with the stock near 1,800, we think the company needs to show that it's maintained some pricing power by driving same-store sales growth without additional price increases. And based on the work that we've done, we're confident that it's happening.